Hello and welcome everyone. We've got today a very distinguished guest with me. First of all, thank you for accepting my invitation and Infoshare organizers' invitation. And let me introduce at the beginning Paweł Lipkowski, who is representing PFR Ventures as an investment manager in the PFR Starter program, which address venture capital funds looking for founding. So, founder of funds. Welcome, Paweł.
Thank you.
Let me also welcome Mr. Krzysztof Domarecki. He's well known as a founder of Fidyash EVC, but also well known as a founder of the Selena Group and their international success at the end. Warm welcome. I would like to also introduce to you a very interesting guy, Barclay, Managing Director of Monterey VC from London. Come on, Lawrence. Be quick. And last but not least, Wojciech Fedorowicz, Managing Partner of Tjp Tango Ventures. We were expecting also Włodzimierz Kuc, who is a Vice Director of Commercialization Department in NCBR, but unfortunately he was not able to attend our today's panel. So thank you once more for accepting the invitation. At the end, I will pass the voice to you as an audience to raise some additional questions. Which most probably you've got as I do. So there is currently a lot of ambiguity around different money sources and programs available to found the company. Different government institutions like PFR, NCBR, private equity, venture capital, incubators, accelerators, and at the end a lot of people are a little bit confused. What are at the end the right money to take and scale the business? So I would like to ask Paweł to answer this question at the beginning.
Thank you for having me. So if we look at the structure of the venture capital funding in Poland, as you just said, you can see a couple of different programs from NCBR that is more concentrated on, let's say, funding the very early projects with a lot of technological risk, to the new kid on the block being us, the PFRs, which is an entity managing 5 funds of funds that is supposed to give money to venture capital, is supplying it and giving it to startups at different levels of growth, from the very seed growth, from pre-revenue, to a fund, let's say, supplying business angels, up to CVC programs and others. In this case, it's important to say PFR Ventures does not give money directly to startups, but our role is more, let's say, to create the whole venture capital environment. So the role, I guess good way of putting it would be, we would like to leave after us an environment where we have a lot of good management teams that know how to invest venture capital, that have track record, and that in fact do not need us in order to make new investments. So that's our part. And of course there's also PARP, another program for, let's say, more of a to put more money into startups that are willing to expand abroad. Which fund to choose? I believe that this is a complicated question. You could start by going to the website of Start in Poland program, which more or less tries to make an order out of this chaos and mess to show which fund is best for what purpose, and to which venture capital go for funding.
Okay, so my general understanding is that people who are willing to do some research on the very early phase should apply to the Bridge Alpha venture capital firms which were announced by NCBR, later stages or not related necessarily to pure research can apply for current or future venture capital firms which will be established thanks to your support, or if they are on the, let's say, grow stage, they can apply, for example, to the companies like Fidiasz. Am I right? When the companies, on which stage should come to the Fidiasz venture?
Yeah. I think generally this part of Europe, because we have to look at this picture more European-wise. In Eastern Europe still, thanks to European Union and thanks to governments and administration of different countries, we have quite pretty nice access, or startups, they have quite pretty nice access to early stage or seed capital or sometimes early A round. Anyway, what we see as a Fidiasz, there is a relatively maybe not big, it's maybe 5%, 10%, very ambitious projects that require much more money than €500,000, where even early stage can cost you 3, 4, 5 million euro. Projects that engage 20, 40 or 60 people, and the best way to funding of such a projects are, first of all, VC funds that are focused on growth stage or corporate VC, and both of them we lack in Europe, in East Europe. And this was the reason why I invented and opened Fidiasz last year, because I found that these kind of ambitious projects with European perspective, they can have some difficulties here. So in fact, at Fidiasz we are focused on the ambitious projects that demand big teams, big challenges and big money, relatively big money here. Concerning the stage, okay, it is product development stage even sometimes, or growth stage.
Okay, thank you. Lawrence, what about you and your fund? What's your strategy from one hand side? What is your investment strategy? What are the most sexy areas of the technologies around which you are looking for? What is the stage? And do you plan to apply for some EU grants?
I would love to. So just a bit of context, Manta Ray is the venture fund being built out of Pietrzak Investments, so out of a large Polish investment office, family-owned investment office. I think what that lends itself to is a fair degree of flexibility and patience in how we invest. We can take a 10, 20-year view on company building because there aren't the same liquidity requirements that a lot of institutional venture funds have. So I spent the last 4 years before this role at a leading institutional fund in Europe called DN Capital, and there we would answer to LPs. We would have expectations of how quickly we would return capital and generate profit to our investors. I think not having that direct expectation means we are looking at areas where the maturity cycle may take a little bit longer. So we look perhaps less at what I used to look at, which was mobile dating, e-commerce, mattresses, food delivery, home sale platforms. We're now looking a lot more at healthcare. So we've done a deal with Wojciech here in the healthcare space. We look at robotics, transportation. We invested in Hyperloop One in the US, for example. I think decentralization and what blockchain is doing, I think, is of interest. Again, we think it'll take time for that market to mature. So if we can be waiting 7, 8 years, 10 years and building with entrepreneurs, then we can, we're in a position to do that. I think stage-wise, just briefly, we're again quite reactive and flexible. We've invested on the early end of the spectrum at the seed stages. We've also done some larger growth stage investments.
Stop here. The let's say early stage sounds from your side a little bit slightly different than in Poland.
Yes.
If you can disclose there, because we had this discussion during the break.
I think a US seed round can often be the size of a UK Series A round, which is the size of a Polish Series B round. So I think that stage is a relative term.
So for you, seed is something around $2 million US.
I think typically the smallest round sizes we participate in are $2 million. There are always exceptions to any rule. I think our investment strategy is global. About half of our portfolio is in the US, half in Europe. What we are excited about doing is championing and taking Polish entrepreneurship internationally. I spend a lot of time in the US, particularly on the West Coast. And a lot of that is to help catalyze the US operations for some of our Polish portfolio companies. One example is Brainly in New York and Krakow. Sorry, my Polish is terrible, my pronunciation. Another one is Booksy. We also have made some earlier stage seed investments. So we are excited about being able to be partnered to European companies wanting to expand into the US, taking the networks we've built there, the relationships we have with top US venture capital funds and also top strategics.
Okay, so it looks like that you are not just investing into the companies, but you are also willing to help them to grow, of course, with your particular interest. However, I would call that to some extent smart money. Am I right?
Smart-ish money.
I
think to this conversation here, when you're a founder looking to raise money, there's a spectrum of different places you can go to, from money which is simply capital with no additional benefit. That could be the grant end of the spectrum, to the strategic investors who are providing capital but also deep access to network and their experience. I think what I suggest is just stepping back for a moment and thinking, what is the right capital for my stage of development? There's no point going to $1 billion fund and asking them for $100,000, because first of all, it's not worth their time to do that. You're not going to get the input from them, and you're going to end up being, having to speak to about 20 funds with no outcomes. So I really think about framing the type of money that's there, what it is that you need at a given time, and get the right person for the job. Just like when you're hiring someone, you choose the right person for the job. When you're looking for an investor, choose the right investor for your stage of development. If you're a founder who has little product experience, but you're very commercial, then maybe a seed fund that has great experience in productizing technologies is a good partner to you. If you're someone who wants to expand to the US, then the Series B or A stage fund that's able to help you flip to the US and has done that several times before is obvious. If you actually just don't need any input because you know what you're doing, or you think you do, and you just want money, then choose the most capital at the highest valuation with the least rights and go down that path. So hopefully you understand that I'm a big believer in context, in framing, and in understanding why are you going into that discussion with the investor? What is it you believe makes them very relevant to your stage of development and what you're trying to achieve?
Thank you.
And now Wojciech can disagree with me.
Yeah. Wojciech, can you share with us your point of view, and also disclose a little bit something which is called strategy behind Tjp Tango venture? Because I noticed that on your webpage I could see as multiple different investment coming from completely different, I would say, sectors and technology areas as well: hardware, software, SaaS.
Yes. So we are part of we are Tjp Tango, we are Polish-Israeli fund. We are part of the Polish TDJ group and also part of the Israeli Pitango group. On the Israeli part is the largest, one of the oldest VC funds in Israel. The investment you have seen on our website come from that side. So Pitango has been investing for 25 years very successfully. In variety of areas. We are a generalist, so our fund has been opened in Poland relatively short time ago, a year ago. So till now we have done only one investment with Mantaray in a company called Stetomi, it's a digital health company, and we have a couple more coming up. We are I totally agree with some of the theses that were said or were mentioned, that smart money is an important element of the puzzle. So I urge, when you have, when we talk about entrepreneurs thinking about which fund to get engaged with, I strongly encourage entrepreneurs to do their homework, because there is a plethora of funds Polish, European, that are active on the market. And it's not necessarily only about the capability that there is behind this, the given fund, but it's like Lawrence and Mr. Domarecki have said, also a certain domain expertise, expertise to scale, expertise to exit, because at the end of the day, we are here to make money. But also about the chemistry. So, you know...
This one I would like to highlight, that venture capital firms need to make the money at the end for their investor. This is not obvious, unfortunately, always for Polish startups.
And actually, this is an important element because turns out that not everybody needs a venture capital. There are other ways also to grow companies, and not every company is good for venture capital, but that's a separate topic. On us, you know, we invest in the smart money formula, obviously, but we are, you know, we like to think that we are in the business of growing companies. So whenever we engage with a company financially, whenever we make an investment, we envision a certain, you know, path to the exit. So we always have to have a certain growth strategy in place. We also make reserves for the follow-on rounds that we expect to happen, because it's unlikely that the company will not need follow-on rounds. You know, as a side note, I see it as a challenge on the Polish market that everybody would like to build a global company, okay? Everybody's saying that they think globally, and it's great. But not everybody envisions how much money is necessary to actually build a global company. So, you know, $5 million round is a first step. In order to make a truly global and truly big company, and, you know, unicorns that you might want to later talk about, you actually need, you know, 30, 40, 50 or more millions of dollars in follow-on rounds to achieve that. So we are this sort of investor that puts that vision or this strategy in place, or, you know, together with the founders, and we sort of sign up to this road. We are a long-term investor. We, of course, want to return the fund, but, you know, on Tango side, one of the exits in December was a company by the name Forescout that was IPO'd on NASDAQ with a valuation of $1 billion after 16 years, okay? So that's a long haul. So, and coming back to chemistry, I think it's important because if you are to work together for 16 years or 10 years or 7 years, better have a good relationship with, you know, between the founders and the fund.
Krzysztof, what would be the perfect, let's say, company or founders which should approach you asking for help, coming from Fidesz to scale the business globally or to apply for some bigger grants coming from abroad?
I think
you're perfect candidates.
I think no one investor is looking for perfect candidate. I can share with you the result of some research. 2 or 3 years ago, with some consulting companies, we made research in Poland how many different competencies were created by Polish successful companies who were startups 20 years ago, because all of us, we were startups 20-some years ago. And now we are successful. Everybody are talking about companies like, for example, LPP here, yeah, or Nowy Styl, or Famur, or others like that. And we recognize 9 different competencies that all of them were common to all these Polish successful companies who were startups about 20 years ago. 9 competencies including marketing, sales, administration, logistics, technology, product development, research, and so on. Then I was using this methodology to analyze startups that apply to us, and we found that most of startups, they have just 2 competencies. Different, but just 2. And don't worry, we don't expect that startup can have all, because there are matured companies that have built that. You have mentioned about that globalization needs a lot of money, much more than $5 million, and I fully agree. But globalization or scaling international needs a lot of skills. And you cannot expect from startup to have all these skills at the first approach when they call you, hey, could you help us with some money? So we are not looking for ideal one. We are rather looking for the people with some ideas and solutions, usually hopefully with some technology behind them, that can be scaled up also by know-how. And this is part of our job.
So it's still everything around potential to grow and hopefully grow quickly and expand as soon as possible, as quick as possible. So what about, Paweł, when you are screening the teams which are applying for becoming the venture capital firms or to establish such kind of activities, what are the major candidate which you are looking for? How the perfect team which will establish the venture capital firm co-founded with PFR should look like?
To answer in one word, it should be a complementary team, which is probably obvious. What we're looking for is, in fact, 3 people at least, where there would be one person that is a sociable person talking to the startups, feeling this world, and then creating the deal flow so that we can be sure that the money that we have invested will be invested within the time horizon that we have from the European Union. The program is until 2020. And then we would need probably a person that would be more on the ground, like the technical officer of the person that would work with startups in creating the value, in providing the smart money, and which would most preferably be a very specialized person in the area of expertise. Generally, when we're looking at funds, we're looking, well, we get both applications from generalistic and specialized funds, but it seems that the specialized ones do, in our words, or in our eyes, have a large chance to win the game. There's been a research made that if we look at the funds, the specialized ones with specialized teams create significantly larger IRR on the investments. So I believe that a specialized fund is something that we look at kindly. And finally, there is, like you, Wojciech, said, the matter of exits and this element of investment banking, of transaction, of understanding the value and understanding the timing of the exit. If we have all these 3 things combined together with a convincing strategy of investing, plus a structure of limited partners, so the private investors who have entrusted their money into this team, we know that this is definitely something to look at. I guess this is quite important, that we do not invest or co-invest just with people who have an idea and that are even very convincing about it. We're looking for people that come with investors who have already trusted their money, their commitment, and their time to show up at the meeting and to talk to us about what they want to do together. And then we're more than happy to add our share of the capital.
So they have at the end ability to execute the things which they are talking about.
Yes, yes, along with smart money.
Sorry for that, but most probably some people from our audience is waiting to hear the answer for the question. I prepared this question especially for you. Sorry for that. So when Polish capital market can expect release of long-awaited investment money coming from starter program?
Yes, we do get this question quite often. So while the official communication about the number of the agreements and about the teams will be coming out soon from the PFR, I can already say now proudly that we've been quite busy in these last weeks signing first agreements in the first programs. So in about 2 to 3 weeks, we will have an official announcement about that, but already now there are teams on the ground waiting to get their license from the KNF, so the Polish Financial Supervision Authority, to become the alternate investment fund manager in order to be able to spend to invest the money. So how long this will last, I mean, getting the license, this is, so to say, out of our hands, but we're doing what we can to speed this process up. One thing that might be interesting, I just checked half an hour ago, that within the last 2 months, 16 new alternative investment managers have been added to the KNF registry, out of 24 in total. So it looks like something got smoother in the process. I would be very happy to say that at least partly due to us, but generally what I'm trying to say is that while this process has taken some time to build up from scratch, now that we're signing the deals and we see the KNF being more and more effective, we have high hopes.
Thank you for that. One question additional. We are talking a lot of unicorn, looking for the Polish unicorn, which will probably be the global company. I think that you noticed some sign of unicorn in Booksy, Dog Planner, or some other companies which you are investing also in Poland. What are, let's say, the major points which you think that are the sign of the company becoming the unicorn sooner or later? Maybe let's start from Krzysztof.
First of all is the size of the market. If your startup is designed for very narrow service for some limited number of companies, probably you are not the best candidate for unicorn. So size of the markets that you address is the most critical, but size of the accessible market, not the total market. Because, for example, if we are talking about the cosmetic market, globally is huge. But if you have one technology in cosmetics, probably your accessible market is just 2% of the total global market. So the first is to analyze market well. Second, geographical market and availability to scale up. And this is the job for funds to help. For example, with Fidiasz, one of our core competence is to help to scale up internationally. It is because of our experience, what we are doing 30 years, I mean our team. Third, technology, but technology itself doesn't help enough. Then you call it innovation, and innovation also is not enough. Our approach is that it has to be innovation that create substantial value for customers. Substantial value. Because globally and Europe-wise, we have a much higher number of innovations that humanity can accept and adopt. Even if humanity would be only a young generation, we couldn't adopt all the innovations that are proposed to all of us. Too difficult. So most of innovations has to die because we cannot adopt them. So which one of them are candidate for unicorns? Those who create really substantial value. Then the next thing, doesn't matter if you like it or not, it's marketing. Great marketing with enough amount of money, usually more than 7 digits, sometimes more, help. Doesn't give you guarantee, but helps. And last one, but absolutely not least, is, as you mentioned in the beginning, and I fully agree, the team. Team has to be complex and has to cover the key areas that are critical for future success. I can give you an example. Finai, the biggest Polish fintech, on early stage, they have already 50 people on board, and all of them, they are specialists in their areas, including AI, data science, banking, marketing, and some others. And this was the reason why at the seed round, they got 3 million euro, which is totally exceptional in Poland. But still, can they be unicorn or not? It's too early to say. So plenty of things that can bring you finally to one dose that can be unicorn.
I think Krzysztof took most of the things I was going to say. Let me add a couple of things. I was privileged to see 2 investments that I made at DN Capital go from seed investments to public companies in 2 years. One of them became a $1.5 billion business after 2.5 years from launch. One of them a $300 million business. So one is a unicorn, one's not. Both of them, by the way, are good returns, but when I asked myself why did they not both become these huge businesses? I think in that case, it really came down to a few things. Crucially, the addressable market for both of them. Now, if you look at the numbers and you do the top-down analysis, they were both in kind of $10 billion markets. One was in mattresses and one was in real estate tech. The difference was that the actual addressable market for one of them was already competed and very saturated. So I think when you're thinking about kind of the size of the prize, like how you're deploying your marketing, who you're deploying it against, there's a very big difference between a greenfield opportunity where you're providing something unique in the market that no one's executed against before, and that's the $1.5 billion outcome, versus the business which is, becoming one of a series of different players. Team-wise, I think what they both had in common was exceptional multidisciplinary teams. They were, 90% of our investment thesis at the time was these are guys who have not just the capability but the ambition to build very big businesses. Now, full credit to Eve, which is trading, I think, now at a $250 million valuation. They still could become a $1 billion company, and they're only a 3-year-old company, so I think it's not a bad outcome, but I think there's some challenges to getting there. The point that wasn't mentioned, and I think was crucial for both of these businesses, you have to have the ability to raise capital. And I think this is something which you may have a great idea, you may have a great business, but if you look at the $1 billion companies or the decacorns, the $10 billion businesses, which is what we're really, really excited about seeing in Europe, they've all raised not just a few hundred thousand, not just a few million, they've raised tens of millions of dollars to do that. Typically, you're not going to be able to find that level of capital in Poland, not even maybe in Europe, and in some sectors you're going to have to go to the west coast of the US, maybe China and some of the Asian private capital markets. But I think that's something which, when we think about the entrepreneurs, is often neglected in the earlier stages. When you're thinking about a seed round, they're looking for $500,000, it's easy to find that, or $1 million, but is this a team that can go and pitch for a $50 million round at a $500 million valuation? And I think that's something which, if you're not the person, that's okay. Just figure out in team building who it is that's going to do that with you.
Pretty much challenging. Very shortly, something to add, Wojciech?
Okay, so being fourth is very hard to add anything. I just want to give a slightly different. Well, one thing that wasn't mentioned is luck. So that's definitely a big component. But I want to, we are a hard tech fund. We invest in hard technology companies. And, in technology space, you can have either incremental technology or disruptive technology. And, being disruptive in a, of course, large market with a great team and with all the components we have mentioned, but if you have a disruptive technology, that helps. I'll give you 2 examples. One is the portfolio company of Tjp Tango by the name of GraphCore. This is AI, it's from UK, by the way. It's a chip for AI, and the company is like 2 or 3 years from founding, and recently Sequoia has invested in the company, significant amount, as the internet says, $50 million at $500 million valuation. So the company even didn't start selling anything; they are designing a chip. So, but if you have something disruptive, the value increases. And the second example is a friend of mine from Stanford, my classmate, who started a company by the name of Helix that does something that is also very cool, because they do an app market for genomics. So think of like Google Play, but you only do, you can get apps for your genome. They currently raised, and it was also established like 2 or 3 years ago, they just raised a round of $200 million at a close to $1 million valuation. So disruption and, this forward-looking strategy and thinking, ahead of the wave sometimes helps, but it's not a guarantee to be a unicorn.
Okay, we are running out of time, and I would like to give you the opportunity to raise some questions to our guests. So, do we have any question from the audience? No? Don't be shy. Okay, if we do not have any more questions, I would like to thank you very much, and let's give a huge applause to our guests.